Welcome aboard a thrilling trading journey. We're diving into a GBPUSD trade from January 2023, filled with more unexpected twists than a soap opera season finale. Get ready for a tale of triumph, tribulation, and a touch of trading drama, he said. Adventure begins on the weekly chart, he spoke, imitating an intrepid explorer, where a heroic liquidity sweep and a bullish surge set the stage. It's like GBPUSD is auditioning for the lead role in a bull market blockbuster, giving us our high-flying, higher time-frame bias. Diving into the daily chart, he analyzed with a detective's keen eye. We spot clues more revealing than a reality show plot twist, a clear liquidity sweep and a decisive structure break to the upside. It's as if the market is dropping hints about a bullish bonanza. On the 4-hour chart, things get as thick as my uncle's barbecue sauce, he said with a playful smirk. We witness a recent low being swept away, followed by a bullish bounce. GBPUSD is practically signaling us with bright neon signs, confirming our bullish bias. The 15-minute chart is where the plot heats up. He engaged with excitement. Here we find bullish order flow and structure with a sweep of sell-side liquidity. It's like all roads lead to Buy City, and we're ready to follow the GPS. 9:45 a.m. in London, and it's game time, he dramatically stated with a hint of anticipation. We spot a break of structure so impulsive, it's like the market downed a double espresso. I make my entry at the 50% retracement, eyeing a 3% target. The stage is set, the curtain rises, but the play takes an unexpected turn. The trade hits break-even first, a cautious hello from the market. And then, just when I'm ready for a standing ovation, it exits at break-even. It's like getting ready for a glamorous night out, only to end up watching TV in your pajamas. The twist, the market then waltzes right into my original target, but without me. Lesson learned? In trading, even when you're dressed for success, you might still end up on the couch. Risk management. It's not just clever, it's our trading superhero cape. What did this GBPUSD escapade teach us? He warmly concluded with a twinkle in his eye. Stay till the end for some golden nuggets of wisdom and a sneak peek into our next market adventure. Remember, every trade tells a story. Some are thrillers, others comedies, but each one is a learning chapter. Happy trading, and here's to trades that stick to the script.
So the golden nugget here is what I look for in the higher time frame that allows me to go to the lower time frame. One rule I think that everybody should implement is that do not go to the lower time frame when your higher time frame is not clear. That way you avoid taking less trade. That's lower probability. The thing that I look for in the higher time frame that makes my lower time frame higher probability is that I look at liquidity and what happened. If you look at this, okay, we do not know that this was a liquidity sweep until something else happened. We can see that price had this movement to the upside, and what happened before that? We swept liquidity right here, causing this move to the upside. So it is bullish. And earlier I mentioned a fair value gap. Okay, we can see that price went to this direction right here. This was the area that if you look back at the video, price was there. And this is what we call a fair value gap, this area right here. Now why is this a fair value gap? Because there's only one participant in the market, meaning to say price is inefficient. So price would usually gravitate towards that area and there's some sort of reaction from it. In this case, we had a rejection. So it shows me that we were bullish for this trade scenario. If we go to the forward time frame, I still look at liquidity in the 4-hour time frame. For example, okay, this was the reaction we had right here. And what happened? We do not know that it was a liquidity sweep until we see a huge move from the market. We can see price swap this low right here and even swap this candle right there. And then afterwards we see price move up to the upside, and then we can see that we had this reaction right here. So that shows me that price was bullish. And other tip is that we have a clear direction, we have a clear bias, we do know higher time frame says that we're bullish. So with that, we have a clear bias. You do not need to go to the lower time frame and think of, oh, but price is breaking to the downside even though higher time frame we're bullish. You only think that when your higher time frame is not clear. So make sure before you go to the lower time frame, make sure your higher time frame builds a perfect story for you to take from and put it into the lower time frame. Because if your higher time frame is not clear, this would have easily been a break of structure for you, and you would have probably entered the trade right here, because you would tell yourself price failed to go above this high, we broke down to the downside. No. Okay, so make sure your higher time frame is always clear before going to the lower time frame. And we can see the order flow for 50 minutes is bullish. We do see how price broke structure, moved to the upside, came down respecting previous low, and what happened was that we had this liquidity sweep and a break of structure to the upside. A liquidity sweep for this might not seem that much for you, but if we go to the 5-minute time frame, okay, we do see that this was the sweep and went to the upside. We also can see that price swept this low and had a move to the upside. So in the 15 minute, we took a trade somewhere around here, the 50%. So it did seem probable enough. It's just that there was news event. So always make sure any trade you enter, manage it properly, because news can instantly take you out. The 1% risk you save today, you could have used that for your upcoming losses, because there will be losses. So this was the golden nugget. A recap: liquidity sweep, displacement, then we know where price is headed. Clear higher time frame, clear lower time frame. That's all. Thank you for your time.